Thank you for checking out Philman Roll-Up and Associates Municipal Market Update for the week of November 16th, 2020. My name is Adam Bauer, and I serve as CEO and President of Philman Roll-Up and Associates. We just did this last week, and I'm keeping that same format as we walk through, where we start with demand, then we talk about supply, and then I talk about where some of the interest rates are. So the reminder on this chart, the green bars represent money flowing into the municipal bond funds, and the red bars represent money flowing out of municipal bond funds. And what you're hopefully noticing is the far right is we are showing money flowing out of the municipal bond funds. So we have a little bit lack of demand right now, but when I show you supply, you'll see that it might not be as big of a deal as it is other points in time. So on this chart, what we're showing here is the amount of volume of municipal bonds each week. And so certainly 2020 has been a good year for volume, meaning a lot. But we've talked a bit about how a lot of municipal issuers were trying to get their municipal bonds sold before the election. And that's really what you're seeing here. And actually the week of the election was a very light week. You can see how it is much lower than historical averages with those dotted lines, and also lower than, certainly a lot lower than the weekly volume in 2020. So then that started to go up a bit last week, and then finally now this week, you see something returning to a more normal level, a bit over on the 2020 average. So this week's gonna be a real test. So the last few weeks, well, you saw that volume. You can see that 928 to 1026. When you have that much volume, it's likely that the underwriters took a lot in, meaning they bought bonds. So even though our supply was extremely low the last 2 weeks, there still was probably a lot of secondary trades where the underwriters had bought the bonds and then had to continue selling them off into the market. So that true amount of supply that we show here might be a bit higher than what we see here when you count all the secondary trades that were likely going on in the market. This chart where we show the 30-year MMD, and then the bar charts or the brown show you the range of interest rates for each one of those maturities. And like I've told you every time I've done this, in 2020, we are on the lower end of the range. Something interesting happened. I've talked to you all about a lack of supply and then a lack of demand all going on at once. And municipal rates have declined. And so that 1 year, we were at 0.18 last week. The 15, we were at 1.18, now we're at 1.13. And then the 30-year maturity, we were at 1.61, and this week we're at 1.55. So interest rates have declined modestly over the last week. And like I said, when we have a lot of supply coming to market, it'll be interesting to see what happens this week. This is a chart that we added to really try to help illustrate how flat the yield curve has been in the recent few years. So the red line represents 2015, and you can see how the 1 year starts off very low and then just really ramps up through year 10, tapers off a bit, but continues to go up through year 30. The brown chart or brown line represents 1 year ago. You can see this line looks a lot like that green line, which is 2020. Both 1 year ago, 2019, and 2020, the yield curve is pretty flat. And you can also see that when I talk about rates being low, the green line is the lowest of those three. And that represents what I've been talking about, where the MMD is just quite a bit lower and hitting there those historic lows. On this chart, we've talked about taxable bonds, and that's because we have a lot of taxable refinancings going on. And you can see the brown charts and just that huge amount of supply that's been in the market and how that's really tapered off. And then what's interesting is even though that's tapered off, you also see that green line, which is the spread to treasuries. So treasuries have gone up, but what we have not seen is municipal yields to have gone up as well. So that trend has broken here, and when you see not rates haven't necessarily gone down when it comes to tax maturities, but they haven't followed the upward momentum that treasuries have. So this will be something interesting to watch, especially as we have more volume, especially if some of that turns out to be taxable bonds over this next week. Economic indicators, I think the real focus right now is there's some really good news out there that there might be some COVID-19 vaccinations that are close to being complete. And they've had very good success rates. Feels like that is one of the driving factors behind some of the positive feelings that investors are having. Also, the why it has not been formally declared by Electoral College, all the media outlets have indicated that President-elect Biden is the winner of the election, and so I think that really has reduced some uncertainty. Whichever way that went, there's more certainty than there was 2 weeks ago. So investors certainly are feeling comfortable there. It'll be interesting to see how things go going forward. But here's some of the key economic indicators coming up. And we do have a Thanksgiving holiday also on the horizon here within the next 2 weeks. As we conclude, want to make sure that you know to reach out to a Philman Roll-Up and Associates registered municipal advisor. If you'd like any more details, you can reach out to me or anyone else on this chart. If it's about a specific deal or just municipal market in general. Do want to wish everyone a happy Thanksgiving. And once again, thank you for checking out the Philman Roll-Up and Associates Municipal Market Update.